Alright, moving along to learning objective number 2, reporting in taxable entities. Okay, so under the individual tax return, most individual taxpayers will file Form 1040. Looks like there's a space there, but it's okay. Which also contains 3 possible schedules, but I don't know why the space kind of threw me off, but it did. Anyways, mostly it's the Form 1040. Now, if you're over the age of 65, there is a 1040-SR. It's basically for seniors. And then, of course, there's the 1040 non-residents. We also have those. But we're going to mostly look at the 1040 and how it works. Now, the 3 schedules that we have are that we show right now. There is multiple. We have Schedule 1, which basically is an additional form of income and many deductions for adjusted gross income. Schedule 2 is additional taxes, such as our alternative minimum tax that we're going to talk about later in the course. Schedule 3 gives us the credits and payments other than withholding. We have to know all 3 schedules to basically find information that we need for any taxpayer. But in addition to these new number ones, and these are all from the TCJA, we have 6 schedules that identify certain types of income. And you've already heard me mention a few of these. But when they have their income and deductions, they must be reported on these following. Schedule A is our itemized deductions. Again, we're going to go over all of those later on. We have Schedule B that reports our dividend income and interest income greater than $1,500. Okay. Also, there's a little bit of foreign items that happen on Schedule B, but that's beside the point. Schedule C is our business one. Mostly any self-employed person will have a Schedule C, or a 1099 person, independent contractor. All trade and business income will be found there, along with deductions. We have Schedule D. This is our capital gains and losses for buying investment assets, mostly stock sales, a lot of times stock sales, but it does have any other capital gains and losses. Then we have Schedule E to report our rental and royalty income. That's nice. So any rental property you may have will show up on Schedule E, and also any pass-through income. This is your K1. Almost kind of forgot what it was, but it's a K1, and this is coming from your partnership or S corp. So either from a 1065 or 1120S will issue out these K1 statements. Basically, it's your portion of the income of that company. And last but not least, Schedule F. And this is to report farm and ranch income. And there's a lot that can go into farming. And mostly it acts similar to Schedule C, but it does have its own unique quirks. But we're not going to really discuss Schedule F too much in this course. Again, it's not very common for most tax preparers to see a Schedule F. So this course is going to kind of really gloss over it. Sorry. But it's just the way it is. Again, gotta teach you as much stuff as I can in this course as quickly as possible. So, we actually have a couple of the business ones that I mentioned before. And again, they put space in these numbers. I don't know why. I guess it's just their format. But first we have the corporation. instead of corporation. It's a the. And this, since the TCJA, before they were scattered on their tax rates, they are currently taxed at a flat rate of 21%. Makes life a lot easier when we try to estimate it. But again, this can change, always can change with the way tax laws come. So nothing is ever set in stone, except which forms you need to file sometimes. But a C Corp will file a Form 1120. Now again, if they elect for an S Corp status, they will file actually the 1120S. So we gotta make sure we put the right form, because again, 1120S does not generally pay regular corporate income tax, because most corporations will pay their own taxes. Instead, it's a pass-through entity that goes straight to the shareholders' tax returns, personal tax returns, and basically get taxed at passive income. But we have to make sure we get that distinction. So again, Form 1120 is a corporation's tax return that they file and pay tax on. But if it's a S Corp, it's 1120S, and these issue out those K1s that individual shareholders will report their portion of that income. Partnerships typically are the same way. They are a reporting entity, but not a taxable entity. Again, basically, it's a flow-through entity, pass-through, however you want to say it, as the income or loss goes to the partners. Again, it will show all the partnership income or loss and allocations. We're not going to be going over either of these forms in this course. Again, this is an individual, but if you do take a business tax course, you get to have fun going through all of this fun jazz, because they have their own laws and it's actually pretty interesting. Alright, knowledge check 1. Okay, so if the knowledge check pops up, key thing is to pause this video and see if you can answer the question. If you can, yay. If you can, that's okay. I'm going to talk about it in just a little bit. But yes, pause it, read the question, and see if you can answer it. Alright, so if you want me to read it to you, you can pause after I read it. It's all the same. So, which is /are the most appropriate forms and or schedule is for a taxpayer who receives dividends of $2,000 and does not itemize deductions? Choose all that would apply. Would it be A, Form 1040, B, Form 1120, C, Schedule B, or D, Schedule C? So again, pause the video, see if you can answer it. If you can, yay! Alright, so to answer the knowledge check, the appropriate forms that a taxpayer who receives dividends of $2,000 and does not itemize deductions is 1. You should choose Form 1040. That's the individual tax return. We are talking about individual here. That's a form that they pretty much should file on. And then we would have Schedule B, which is the appropriate form to report dividends and interest over the low threshold of $1,500, which he has $2,000. Now, Form 1120, that is our corporation. So that's our C corporation tax return. And of course, Schedule C was the self-employment business schedule. profit or loss on that. So hopefully you got the two right. And if you did, awesome. If you didn't, it's okay. There's a lot more ground to cover. But if you do have questions, let me know. But that will conclude this learning objective of going over some of the sections of the tax return.